There is a look at Alphabet. Now, it is down from its highs of a couple of months ago. One of the concerns has been how rapidly the search business is changing now that consumers are using large language models to look for stuff. I got to admit that I'm finding them very useful. Anyway, Alphabet, parent company of Google and YouTube. Stock is up around 1%. Revenue did increase in its second quarter, and it was boosted by growth in the cloud. And the company, though, raised its annual CapEx forecast. Let's find out more from Glen Smith, Chief Investment Officer at GDS Wealth Management. Glen, thanks very much indeed for joining us.
Good to see you, Andrew.
I think some investors think, well, how could Google ever go wrong? Because they've given a new word to the English language. They're so powerful in YouTube, in Google Maps. So is this a stock that you own? Does it look attractive?
Absolutely. This is a stock we own. And yes, it is attractive. It's not just the search, but as you said, it's the YouTube, it's the AI. They've recently announced a partnership with ChatGPT, with OpenAI. So they have their hands in tons of different revenue streams, which is a double-edged sword. Because they keep beating the top and the bottom line revenue, the stock keeps going up. The only problem with that is the indexes, the S&P 500 in general, it's becoming more top-heavy. The Magnificent Seven they're about a third of the index, right? It is a stock we own. It is attractive, especially when you compare them to Magnificent Seven. If you compare them to Microsoft or Meta or Amazon, the price earnings, it's much more reasonable.
Give us an idea of why Google or Alphabet is not at record highs. Is it concern over the core search business?
I think that is a valid concern, but they seem to be adjusting to it. The revenue keeps going up with search. I think other people are seem to be more concerned about it than they are because they're so diversified. I think it's gonna 5 years from now, it's gonna be part of the change in society, how AI works. In terms in general, the stock, not always is a stock price a reflection of exactly what's going on in the company. I think in general, some tech stocks are just getting a little tired out in the last couple of years.
What's the main theme in the markets for you right now? We keep hearing, well, investors are less worried about the president's tariffs. What is your feeling? Have people just got used to the idea we're in a trade war?
I think the two things that are driving the market at this point are tariffs, as you mentioned earlier this week. The U.S. and Japan agreed on a tariff. The U.S. Having a 15% tariff on Japanese imports. That created some relief in the market, and the market rallied, but there's still a lot of uncertainty out there. So that's part of it. That's trickling inflation into the system. CPI trickled up in the U.S. a bit to close to 2.5%. So while it's trending lower to the 2% on the Fed target, it was a little bit of a blip there. And the repercussions of that is there's probably now not going to be a rate cut anytime soon. You're probably looking at the fall before that happens. And I think the market and the citizens want that, but I think the Fed's hands are tied at this point.
You do you want to remind our viewers that market sentiment can shift abruptly.
Absolutely. There's always black swan events that happen that it's hard to predict. I think it's hugely important to always have your shopping list of what stocks you find attractive and why, and wait for the opportunities. Whether the markets keep going up or sideways or down, you want to be able to quickly pivot and take advantage of any blips.
You have some stock ideas for us. Toll Brothers, there has been strength over the past week or so in home building stocks. What attracts you to Toll?
So they have a huge land-rich portfolio. In the U.S., they're one of the biggest high-end custom home builders. And even though they're up 250% in the last 5 years, they're kind of flat this year. We think the real estate in the U.S. is going to start to thaw out later this year when interest rates start to come down. So this is a stock that's doing relatively well, even though it's flat year to date. It's done well over the last few years in not the best housing market environment. So we think with rates come down a bit, this is just going to add fuel to fire for this stock to take off. And we talked about valuations a second ago. You look at the Magnificent Seven and some other stocks in the S&P 500 where the valuations are a bit stretched. Here's Toll Brothers at under 10 price earnings ratio. Extremely attractive with a little bit of a 1% yield, under 1% yield.
Advanced Micro, would you prefer this to NVIDIA, or what draws you to AMD?
I thought you might ask me that. So we like AMD. We do like NVIDIA, but for me, it's like Pepsi or Coca-Cola. I like them both. It depends on the occasion, perhaps. But I think you don't want all your eggs in one basket. Even though NVIDIA is a wonderful company and we like it too, I think AMD is a way to diversify a bit. They're literally a direct competitor with NVIDIA with their MI300X chip that's becoming a bigger and bigger player. It has diversified revenue streams in terms of who do they sell those chips to. So I think this is a way to be in the semiconductor space, but not just focus on NVIDIA. The only downside I would say of an AMD is it is up about 31% right now. So, you know, if I didn't own it and I wanted to own it, I'm not saying I would own it today, but I would put it on your shopping list and wait for the next 30 to 60 days. There'll be some type of blip. It might make sense to put a fraction of your portfolio in it.
Your final name is one, I get mystified when businesses give themselves a hard name to pronounce, but is it IQVIA? And they're a healthcare data. So it's IQVIA.
Yep, IQVIA Holdings. They're a data analytics clinical research company. What makes them unique is they don't create drugs, but what they do is they work with Moderna, Pfizer, and they work with technology, whether it's the cloud, machine learning, and they speed up trials for the drugs. And this is a big deal. So it makes drugs a lot more efficient, cheaper, and then once the drug comes out, what IQVIA will do, what they'll do is they'll help with the marketing, with the sales, so it's a kind of a one-stop shop to get those drugs approved and quickly push them out there.